I teach a webcast every Thursday at 2 p.m. Eastern. And in my last class, last Thursday, I had someone ask, hey, why don't we take this trade that's a dead cat bounce, or at least looks like a dead cat bounce? And let me go over why we didn't do it. I think it's important to understand some of the thoughts behind it. So basically what a dead cat bounce is this idea that, let me kind of show you on this stock. I'm going to zoom in on this so we can see this very clearly. That the price action is running up, and then it has this major gap. And so this one gap from about 355 all the way down to about 300. And so a significant gap, and that's what we're looking for, right? And the idea behind it is there are people in there looking to take profits up here at 340, 350, 355. All of a sudden when it gaps down, hey, they're no longer thinking, or they're thinking, hey, when it runs back up, I'll get out, right? But after that, what happens? Well, it drops down, and now they're thinking, okay, I could have gotten out at 300, now it's at 270. When it gets back to 300, I'll go ahead and just cut my losses, call it good, right? But when they do, they put bearish pressure on it, and then it runs back down. And that's kind of the idea behind the dead cat bounce. Well, so in the class, we had a setup where it looked similar to that. You can see right here, this was PayPal. And on PayPal is interesting because it had that sizable gap from $52 all the way down to about $43, $44. It came down, but look what happened. It ran up to resistance, and they were saying, hey, why don't we get in right now, even though it was like back in here. They're saying, this should roll over soon. Well, guess what? It hasn't. And that's the key, right? It's a potential pattern. It's not necessarily a pattern until it actually reveals itself. And here, this was setting up to potentially be a dead cat bounce, but in the end, if it closes here, it isn't. It's breaking resistance. It can run back up and maybe close this gap, come back up here to 52 potentially, right? It's just saying that this pattern that we're looking for is not working out, and that's the importance of waiting for some confirmation. Maybe an evening star, maybe a shooting star, just some sort of maybe even an indicator rolling over, something to suggest that it's showing some weakness and isn't going to break above that resistance, And so like here's another one that we're looking at, like an AIG. You can see the gap here, drop down, rally back up. Now it broke above that, but you can see the indecisiveness at resistance. And so this one still has some potential to roll back over. Maybe we do have the shooting star followed by a bearish candle there as some confirmation. We'll see. Maybe it'll continue up. But the importance of waiting for that confirmation can be vital in some of these patterns. Again, it's not a pattern until it does develop. So keep that in mind.